Good morning, traders. Welcome to Wednesday. Hello, Stel.
Hello, okay, hello everybody. Great to
How are
see
we doing
you all
today?
here. I'm doing good. I'm doing very good. Weather's great here. How about you?
Yeah, actually, the weather is getting better and better. So perhaps we are in our 5 days of summer here right now. Get
5
out
days
of
of
the
summer.
house and enjoy it. Right, let's get stuck in. Ryan is off for the next 3 sessions. He's gone over to the dam in Amsterdam to support the Hammers, see if they can get a place in the final of the, what is it, European Conference Cup or so? Yeah, I think that's
Yes,
something.
some non-important cup.
Yeah,
I'm kidding.
he will like that when he listens to the recording of the show. Still, well done. All right, let's get stuck into what's happened overnight. Let's do the Biden-McCarthy thing first. So they went into the meeting, came out to the meeting, saying that things look better, or at least some positives, as they should be saying. They're going to work on staff level negotiations. They are going to reconvene the meeting. Biden has been shortening his overseas trips to make sure that he's available to do the meetings. Well, the effect that it had is that the CDSs have come. The stress in the U.S. market, in the CDS market, has come off a little bit. The dollar has regained some strength. Although if we look at I mean the equity markets have been relatively flat. I may have thought that they would have taken it well, but I think it's more important what's probably going on the yield side, on the stress side, on the risk side than anything else right now. But they're not out of the woods. We as we have been saying, they're probably going to go to the 11th hour anyway. But it does seem that things are looking positive. They understood Yellen's every 5-minute message saying that the world is going to go down under if they don't reach an agreement. Then over to Asia. China, we've seen the Chinese yuan weaken, taking the Aussie with it. There's a lot of speculation going around that more than any news, it's the speculation surrounding those data that we had. When was it? Yesterday, which came really below, very much below expectations. So there's a lot of speculation around that the PBOC will inject more liquidity, which they are, by the way, doing in small injections nearly every day, but that they are expected to support the economy more by possible rate cuts. So far, they have failed to show those rate cuts, but the market is still very much speculating on it. And we'll have a look at the dollar China a bit later, but it has broken above the 7 mark. So that's relatively important, I would say. So we'll have a look at that a bit later. What else is going on? Well, I think we stay straight away in Asia and go straight away, have a look at those Japanese data. Going to jump a little bit from one to the other, but staying in Asia, GDP really outperformed. Let me just kill my squawk box. So GDP really came in better than many expected, and so there's a lot of talks going around in Japan that Japan not only avoided a recession but is showing decent growth, and now more and more, as they call it, people in the knowing or analysts or people close to or whatever. Are starting to expect, and especially bank analysts are starting to expect that the Bank of Japan may actually already tweak something in June. So we are a little less than a month away from the next Bank of Japan meeting. And as we've already said and noticed, is that Ueda is an over-communicator. So if the market is starting to build those expectations, I would suspect that he is not going to be too far away to throw in another comment or so, even before the Bank of Japan meets. In the meantime, though, and I'm going to go over to another screen. In the meantime, we have to look at this one. Do I go long term enough? Max. Where's Max? Oh yeah, here's Max. We have seen the Nikkei is regaining levels that we have not seen since 1990. The market is really betting on the first of all on the Japanese revival. It is also listening to what Buffett has been doing over the past few months, and that is piling into Japanese trade companies and making quite a bit of money out of it. So the market is now really starting to really get into Japan. And being very positive. If you look at Bran, good morning, good very early morning. If you look at how the correlation works between the Nikkei and the Japanese yen, Bran, scroll back into in our chat room, in the general room. I've been explaining the correlation between the Japanese yen and the Nikkei in length over there. But basically, there is a clear correlation between a weaker yen and a higher Nikkei. It has been on and off over the past decades. There has been like pretty decent shifts in that correlation at some point in time, especially when there's crises or bubbles or so. But the base correlation seems to be back. And I've explained how that works and the mechanism works in the chat room.
Okay, if I may add, sorry to interrupt, one thing, just to put in perspective just how much the Nikkei had outperformed going into the 90s and then underperformed. If you compare the S&P from that 90s period, it's gone up over 10 times, and the Nikkei still hasn't regained those all-time highs. So it was an incredible rise in the 1980s, and then just then complete stagnation and obviously reversal a little bit, deflation into the next 3 decades. Amazing, absolutely amazing. If you go, look at the S&P.
yeah. I mean, it was clear where you had to put your money. That's for sure.
Yeah.
If you would have, just when we were born, you buy it at 100 and you sell it at 4K. Wow, that's a bit of a return. Well noted and spotted that one. Thanks for that, still. So going back to what we were talking about. So that was a decent overshoot, and so now the expectations are coming forward a little bit on what the Bank of Japan may already start to do in June. As I've said already, I think ahead of that meeting, if we don't get over communication, there may be some decent speculation again coming in the market on what they may possibly do. So I would say the week before the Bank of Japan meeting, pay attention to what's been going on. Well, let's move over to the United States. What's happening there? Most of it are just comments before we look into the data. Most of the central bankers over there are still saying, depending on who's a little more hawkish or dovish, still saying that there's more work to be done, that inflation is still a bit stubborn. But Williams, for instance, has said that he thinks that inflation is really starting to move in the right direction. The rest, Barkin said he still wants to be convinced on how inflation will move. And Goolsbee, then he came out. He's a bit of a dove, But one of the comments, which is not inflation related, said that he still believes that there is some decent potential to get to a soft landing. So those are the comments. And I am looking around. Yeah, before I forget, and looking forward to what's going to happen. Keep an eye on the sterling. In about 20 minutes, Bailey is going to talk before the British Chamber of Commerce, and the text will be released just before he starts his live statement, and then probably Q&A on there as well. So keep an eye on what's happening over the course of the flow show, because around 11 a.m., which is in about 20 minutes, the sterling could be on the move here. Now, let's look at what's been going on the rest of the data. We had that retail sales yesterday. I'd take it in combination of both. You have a retail sales who didn't show the expected bounce. Actually, the revisions were a little bit slower, but then the retail control group kept it relatively kept it up. Let's put it that way. The dollar did not react a lot to it. The market is seemingly overlooking most of the immediate data now, and really listening carefully to what's happening on the debt ceiling. But the dollar didn't actually move that much. Even it weakened just a tad, and then came back on the bid side, and that's got reinforced later on with, in comparison to what's happening in the Eurozone, U.S. industrial production did hold up in April, and that may have reinforced a bit the fact that the dollar remained bid, I must say. Canadian CPI coming out, the headline still higher than expected. The core coming off a little bit, and Canada really did a scissor move there. First of all, the Canadian strengthened quite a bit versus the dollar and the rest of the currencies, and then it flipped around. I think there's a lot of uncertainty still around the Bank of Canada, what they have to do, but they will have to note that it's sticky over there as well. Do you have any comments on this block of data that we saw yesterday, Stel?
Not really. I mean, it was mixed data from the US. The revisions were lower. Headline numbers were kind of okay, and like you said, the industrial production was better than expected. Kind of neutral all around. Same with the Canadian CPI. There was weirdly, the headline number fell, and the headline number was higher and the core was lower, which is opposite to what usually we've seen over the past months from the US, from everywhere. But no, overall, it was a kind of a non-event, and that's why the markets didn't do much either in response. So yeah, pretty boring actually. What do we have today? We have building permits, housing starts. Okay, so let's housing data.
Let's have a look at what was so far. We did have the wage index in Australia, a bit sticky as well. Is this, and again, it's opinions. A few banks came out thinking that RBA is not done yet, but despite that, the Aussie couldn't find too much of a bid in the overnight session. So yeah, what RBA is going to do is really an open bet on the next meeting. I think there's going to be more data coming out before we know what is really going to go on there. Moving, that's the French unemployment rate came in still very good levels, lower levels. For France, this is a pretty decent. If you get into the sixes for France, this is actually a pretty good report. It's not the same It doesn't have the same dynamics as some other countries who can go into the low 3s or 4s, whatever. It's virtually impossible over there. So these are pretty decent levels for France, for instance. And then just a few minutes ago, we had the final CPI in the Eurozone, pretty much as the flash showed us. Well, this one is pretty much higher. Ex tobacco, well, okay, but the year-on-year pretty much in line, but also there very sticky. So that should likely keep the hawks a bit on the upper hand. We've heard a lot from the ECB hawks lately, and today we rather have the other side speaking. We had the cost already, Panetta is due, and I think Centennial somewhere as well at some stage, unless he has already spoken. But yeah, those are more like either the and the Guindos here later as well. Those are more like the either moderate or slightly doves. So we may have a bit of a different sound to what they're saying than what people like Holtzman or Nagel or whoever may have to say. The cost already this morning said that they are closer to the end of the cycle. But yeah, I mean, just keep in mind that they are speaking. I don't think that this endless babbling of central bank speakers is changing much for the markets right here and now. We are waiting for data. So what's next this afternoon? Building permits. Oh, really, it's a very light.
Yeah, it is. Just
agenda.
housing data, and that's it.
Yeah, mortgage data, housing, building permits. And that's really it. The usual oil data. What did we have last night on the API? Showed a bit of a surprise build versus a draw expected. So this should probably reflect in those numbers this afternoon as well. And looking at oil, it's not really very buoyant, is it, right now? Stelios, do you have anything else on the data, on the news front that you saw? I think I forgot a couple of things, but I'm leaving that over to you.
A couple of headlines which brought my attention. Nothing major, but a couple of interesting things. One, the UK Treasury Committee had made a report on cryptos, and they basically said that unbacked crypto, which pretty much covers all of them, should be treated as gambling and regulated as such, which is interesting how they view it. And I'm not saying I agree or disagree, but that's definitely interesting to see how they view it. The other interesting headline was the UBS / Credit Suisse merger or acquisition. There's now a report saying that UBS expects a $17 billion hit from the rescue because their due diligence was hasty. So I'm guessing they saw things that they didn't see before. Interestingly, they're saying this is fine because it's going to be offset by booking a one-off $34.8 billion gain from what they call negative goodwill, which is when you buy assets at a lower cost than what they're actually worth. That's interesting because the $17 billion loss is going to be probably a real one, and the other one is going to be an accounting one. So cash flow wise, not looking good, but I'm sure there's not going to be a big problem. But man, these are some pretty large numbers.
I mean, yeah. But how much did they get from the government to make the deal happen? 8?
They had a 5 billion Swissy, if I recall, buffer. Anyway, not enough.
Okay. All right. Yeah, was it 5 or 8? I had 8 in mind, but 5. You must be right with 5, and it's not going to make a big difference. It's not enough. But as if UBS didn't know about the dead bodies in Credit Suisse.
Yeah. The other thing I wanted to talk about just briefly is the debt ceiling, and I know it's been the flavor of the month, and it will continue to be. We have Janet Yellen, like you correctly said, warning, if this isn't met quickly and if it isn't resolved before the last hour, then we're going to avoid problems. There's going to be problems if we don't, etc. And she's right on that. And then Biden saying, I'm optimistic for a deal and all that. They are preparing us for the deal. And interestingly, I don't know if we mentioned this before, but since 1960, the debt ceiling has been either increased or suspended 78 times, basically on every occasion, pretty much.
Yeah, we already spoke
said
about that 70 years, but it's actually, if you go back to the 50s, is it not like in the 80s?
Yeah.
So,
yeah, you're right, actually.
whatever.
So do I think it's going to be different this time? Of course not. And I actually think that everybody has a vested interest to get this solved quickly. Because the economy is not doing great. We're not in a period where things are really rolling along and, growth is high, inflation is low. No, we're in a difficult situation. So they have to do something relatively quick, I think. The other thing, I actually put it on the, excuse me, on the chat room. There was a chart that I showed about the Case-Shiller National Home Price Index, which shows a decline in this index or a flatlining pretty much every time before a recession, before a major recession. And we have now got such a decline since 2022. So for the past year and a bit, and it's a pretty significant decline if you look at the chart. As I said, I put it on our members only chat room, and so this usually precedes periods of trouble. So we have to look at the housing data that's coming out today. It's going to be more important than usual. We used to just say, yeah, whatever, 1,000 here, 1,000 there, difference doesn't make any difference, but or 10,000 here, 10,000 there in housing starts. I think it's going to be important, and we really do not want to see a trend where this is going lower. And we also have to consider the price of lumber has been dropping, and that's always, or let's say almost always, a leading indicator into what's happening with housing, supply and demand in the US, I mean. So, with rates going higher, remortgaging, refinancing or new mortgages being really expensive now, people will not want to be investing in housing. And you have this trend over the past 10, 20, or not 20, but 10 years definitely, people buying second and third and fourth homes, renting them out or on Airbnb, or doing them up and renting them out and doing stuff. There's a lot of leverage in the system still, and that's been helped by 30-year fixed mortgages at pretty much nothing. So this is dangerous. Housing will turn. It's already turning, but let's hope that it doesn't turn in a bad way, because that's going to have very negative effects on the economy as a whole. Because let's not forget, about 20% of GDP is housing, and the wealth effect that everybody feels is with their home, because that's the biggest asset usually. So just something to be wary of.
Yeah, there is some logic in that move, right? Because when you have the pass-through effect of rate hikes, it's usually in all those rate hike cycles you have an effect, right, on everything. It's just the fact whether it's going to fall out of bed or just being a gentle slide, right? It's all about the slope and where it stops. Thanks for bringing that up, Stel.
No worries. There's a question from one of our friends who says, what happened to the debt ceiling isn't resolved? Is that dollar negative or is it positive because of risk off? I think it's going to be dollar negative, no matter what risk does. What does risk do? That's a different question. It's harder to say, but I think the dollar drops.
I think we're in that scenario. If that would happen, we're in that scenario where nothing will, I mean, nothing will hold up is a big word, but at least, and let's not forget, it's always going to be a temporary one as well. It's like a crisis, but I mean, we don't know how long it lasts, but it's going to end at some point. But at first, I reckon it's going to be just negative everything, negative yields, negative risk, negative dollar. Everything is going to move at in the same time. But then again, for how long does it last, right?
Yes.
The thing I just see Bailey's speech has been released so far. He is not saying too much different from what he said in the press conference, or in the press conference after the Bank of England. So actually, sterling isn't moving a lot on what he on his initial speech. So let's yeah, I mean, thanks, Gav. I mean, it's exactly what he said, right? If there were to be evidence of more persistent pressures and further tightening in monetary policy would be required, that's exactly it. And then at the same time, he says that he expects it to fall sharply over the over the next month. So that's exactly what he said. Sterling is pretty much ignoring those comments. Okay, right. While we're on it, let's dive into the price action. Same as with all the dollars, the sterling failed to hold its rally above 125. It's become a decent level up there. I actually didn't put my chart correctly, but anyway. So just this a little bit. Anyway, for the time being, we're turning around. I'll let you guess where we are. We're turning around 124.40. How much more of a magnet do you want? We've been talking about this 40-50, 124-40-50 zone. It's an obliged passage in whatever sterling is doing these days. It's really a big magnet, and we seem to be coming there every time. So we've also tried to get below this 124. I had it at 25, and that's because I took this prior high and this just as an overshoot, and then it was the 61.8 was at 25, and that's exactly where we stopped really. So this little zone here, 25.30, keep it in mind as well. It's a bit of an extra layer over there, but yeah, I don't have that much to say, because euro sterling is very static right now. I've got the impression that some people are really happy to trade it around 87, because if it goes below, you never make it anywhere or stay for long below 87 3/4 65, and if you go up, we are having trouble to stay above 87 30, whatever. We haven't yet even managed to retest this one here. Overall, my view is still unchanged. I still view that, based on data and everything, and fear that people had about the surrounding the sterling, it's reacting slightly better than what may be expected. It's not your usual sell sterling and close your eyes and it's going to get lower at one stage. That does not happen right now, but we are now really building this range, as you can see, 30s, then up to 20, coming down, first testing down into the 60s, and then bounced yesterday 3/4, and then bounced. It's really very static around 87 on euro sterling. But on the cable, there's a bit of interest if you look at this trend line here, where it has broken, and that's the one that Stelios also showed on a prior show. I think this broken trend line that comes in at, it's actually a bit lower now, 123.25, but a lot of people are looking at this 123.5 50-60 zone as a pretty decent cable level as well. So if the dollar would catch some more bid or see some more buyers, I'd say keep an eye on what's happening in this zone here. That's probably going to be quite important. I still think that the do or die, and I've been saying that for a long time now, it's moved up from this zone here where we spoke about before. It's moved up to this zone here now. Whatever's going to happen in this area, if ever we get there. This is the 122.60, 63 quarter zone on the cable. I know the trend line is, if that's broken, it should accelerate, but still for me, if you take away trend lines and everything, this is a really, really big important zone. That's my view anyway. Euro dollar, well, it's broken here that we saw already. And now it's come lower as well. There's this zone here around 108.30 where we are hanging around right now. And look at what's happening here. You've got this trend line coming up. Some people put it here, and it's actually already broken. And that came in around 108.30 as well. But there's some more happening below. The trend line is coming in around 107 by the time we get there, 107.65, 75. And then you have this zone here as well, which is 107.85, 108.05. And if you go onto the daily, we are on the cloud. You zoom in. We are on the cloud. And if you enter the cloud, if they succeed this afternoon, which really has the looks, because the dollar is really bit there again. The underside is also 107.75. So this whole zone that I'm showing down there, and that I think partially replies already to a question in the chat. This whole zone down there is going to be pretty important for me. So watch out what's going on if this thing goes below 108 towards this 108 107.73. Okay, this is important. All right, let's look at what's happening on the yen side, because that's been interesting. As we've seen yesterday, this has been a bit of strength in dollars, and then look at what happened when the Nikkei was shooting up. Dollar yen just went higher and higher and higher. This is one of the correlations that has been in the market in I would say in normal times, or in times where the situation in Japan is actually pretty okay. And the one is really pushing the other. If you look at the equity markets, and if you look at the yen value, and that's an interesting correlation, very interesting correlation to observe. It also worked or works at times in other markets, because if you look, for instance, Nikkei is going higher and the yen is going weaker. Now look at what's happening in the S&P, for instance. If you look at the S&P. Let's look really on the short term. So the S&P since what was it? No, okay, this is not a really good. But if you look at the S&P overall, it's been sleeping and sliding, and the dollar is not, and the dollar is actually a bit stronger. So the opposite does happen in other equity markets, other equity markets as well. So just keep an eye on that correlation, and look what I've put in the general chat room for our subs to explain this phenomenon. Okay, let's get back to FX. Yeah, dollar yen retested this 137, 137.10 area. It's been an area of interest before. We briefly went through this channel. If we take the other high, there was still a little bit of room to get up there, but I like to use those closer highs. But anyway, so it's a bit of an interesting zone here. If we would go any higher, there's a trend line coming in around 107.70, and then we have our prior high here at 138.20, right? But as we know, 138.20, 130, what was it? 137.95, then 137.80. If it goes up there, it's going to be a fourth test to try and break. So this zone is going to be very, very, very important for dollar yen. And for as long as it's not broken, we still should observe a range. But I'm going to say personally, I don't know. It could go before we even think about what's going to happen on the next Bank of Japan. Let's see. For the time being, respect those channels, respect those ranges, but especially also respect what's been happening here. Higher lows, higher lows, higher lows. Puff, puff, puff. We're lining them up. So if you look at that means that on the flow side of things, people are happy to pay up a little bit. Could it be for dollars on the one side? For sure. But the big expectations that the Japanese whales would get out of everything which is not Japanese is not materializing yet. That's another fact that we would that we have to acknowledge. Okay. Let's have a look on what happened on those yen crosses, because they are holding up pretty well. If you look at it, the euro yen for the past couple of sessions has been trading along this line, trying to make up its mind. And then we have resistance here up at 148.60, 148.60, 148.60, 148.60, and it capped again today. So that's your resistance right up there. If it goes above 148, what is it, 85.90, then I think there's a possibility of this pushing through. But for as long as 148.60 caps, respect it. Sterling yen, that's a bit on this trading inside this cross, but again, if you look at how it's been behaving, where we expected the yen to strengthen, and I've been showing those levels already a few times, we never even came down to test, which I thought would be possible at some stage to test 166.75, but it held between 167.90 and 168.5, where the prior tops were. It's holding now, and as a result, we are trading above 170 again. A bit undecided here, I must say, a bit undecided here. I'm not taking a side here, but I just note that similar to dollar yen, this is still holding pretty well. If you look at despite what happened in the dollar Canada, if you look at the Canada yen, we're having similar situation. Despite oil being a bit fragile and stuff, we are seeing those kind of similar situations where downside levels are tested and starting to bounce. So not saying the yen is going to go much lower, but I'm just saying that if we get setbacks, we do seem to find demand in those yen pairs right now. So just a thing worth noting, in my opinion. Moving, yeah, this dollar CAD was I thought a bit of a strange one on the CPI, but I think the market is really divided and scratching its head on what the Bank of Canada may do. And we also have to note that it's not because CPI is going higher that your currency is getting much stronger. And the prime example of that is lately the Japanese yen, because the CPI has been moving higher, yet it's not trading at lows. Yes, Derigi, I'll have a look at it. So yeah, this one is trading inside a triangle. Really, keep an eye on what's happening around 135.80. If ever we get there, we're turning around a bit of a hinge here, 135.15. Downside, main support intraday 134. If that would be going, then we are trading back down to low 133s probably. Range, to me, range. Yeah. Okay. Yeah. One that I'm actually smalls in is this Euro Aussie, but today it's coming back down a bit, and I think that has more to do with the Euro side than anything else. But Aussie is trading on was trading on quite good levels as well. So perhaps it's going to at least stabilize, if not going higher or lower. The range really is 162, 164 right now on the Euro Aussie. 62 support line, and then 64 still those prior zones here. It showed up again. Okay, it went a little bit higher before the spike, but it could be that this one is in some sort of a formation here. But ideally, then we should go and have a look into the 164, 4.5 to see what's happening there. That for the Euro Aussie. And then I need to show you the Aussie dollar, right? Because this is getting a bit important here. This 66, 35, 40 zone. We briefly went below, and we are starting to rebound now. So respect it. I'd say respect it. I've sold some Aussie, as people know, but I've taken 2/3 of around here, and then we'll see what's happening on the in the afternoon. Sorry, when the States come in, when we get those housing data out of the States as well. But we have to respect it. Top side. 66.60 is a bit of the hinge of the day. I think perhaps the pivot of the day. Get back above. We may even make it back to those to the high 66s, likely even. And that's it. One that is really stubborn is the Kiwi. It's barely moving, but where I would have expected that it would go lower at some stage. It's very, very, very resilient. So I'm staying out of this one for the time being. Right. One more, and then we move over to what everybody wants to see: gold. Dollar China. It's breaking. We are above 7. It's also breaking a bit of a channel here. We are above 7, and we are in the test of this zone here. We actually already traded slightly above. It's a daily chart, so it looks to be small moves, but they are okay moves. But I wanted to stay on the daily because we have levels here that we should also respect, and that's what I was saying in the room earlier. This is a confirmation zone here, 701.5, and we're back below. Above or below on the close, to me, is going to be important. As people know in the room, I've taken most 3/4 off from my purchases here. So I accompany it, and that was the plan, because I'm not
nice
sure.
Trade, man. Nice trade.
Thank you. I'm not sure whether it's whether we are going to get confirmation. If we get the confirmation, I will see tonight or tomorrow morning what I'll do with it. If we don't confirm above here, I'll probably sell the rest out and take a nap. Right. What everybody wants to see. Gold.
Gold, yeah.
It's tricky. How do they say? It's complicated. No, it's a bit tricky. It's just a bit tricky, and I don't think it's really panicky yet, but it's a bit tricky. We are below this 1990 2000 zone, which is this is just going to be very simple. If you get back above 2000, this move will be over. To me, it's relatively simple. Now, as I've been saying, I've got some in the something in the 1970s, and as we can see, it's been a traffic zone there as well. I'm going to take this one out. So it's been a traffic zone as well. So watch what's going on here, and then I know people are watching this one, this prior high 1960. It's also a
23.6.
Sorry.
It's also the 23.6 fib from the
low.
low.
38.2.
It's a 23 from the low in the 16, 14, 15 low, whatever it was, to the the 2067 high. It's a 23.6 retracement.
Something is wrong here.
You're looking at the high.
This is wrong, right?
You're looking at that high from, yeah, I'm saying from the lows in November.
Here, okay.
From the lows in November to the highs, there you go. From there to there, it's at the 23.6, pretty much.
Alrighty.
So
Okay.
that's the first level for me.
It works on the more longer term, and it works on this one as well, because
Yeah.
the 38.2 is not far there too. Yeah, okay, so this is 1960 what people are talking about, but if you look at the trend line here, which then broke and went up, this could go all the way back down into the 1920s. But okay, it's not a clean 3-point trend line, so perhaps go with the 1960s, really. It's going to be relatively important. It's possible, you know, if the dollar catches another bit, if everything gets sorted and dollar catches a bit, and perhaps yields are going to be supported because of the treasury can issue a lot of bonds again. It's possible we are going to go down there. I would just say that if it goes back above 2000, get your confirmation from 2004, perhaps. It's probably that the correction is over and we move higher. Silver is doing well. I mean, it's not the same picture. We have the long term here. We have the longer term channel, which had been broken. And to me, that now comes in at 2350, and we are slowly getting there. Trading around 65, 70. Yeah, we're slowly getting there. I wouldn't even exclude we have a look below before this whole story is over. It all depends really on how data are holding up. If the data are holding up better, this one should have a little bit more elasticity to start rising again. But as Stelios has already said 100 times, and me perhaps 99, we got to be patient in this one. Got to be very patient with silver. So what's your take there?
Well, I agree. And I always say when people ask me about these two, gold and silver, if you have a short-term view, then, you know, it's all about technicals, what's happening with the dollar, yields and everything. But I have a much longer term view on these, so I tend to accumulate and then distribute. So I have friends who ask me, you know, what do you think about gold with a 5-10 year horizon? And my answer is always the same: because of inflation, because of ever increasing debt, it's going higher. I think that's a fact, mathematical fact. What do you want then, as not a trader, as an investor? You want high rates and you want a high dollar to bring it low so you can actually buy it at a better level. And I think this is what we're seeing. And even with high rates and a dollar kind of rallying a little bit now, we're still not that far off the all-time highs in gold. So this is an opportunity, as Steve would say. I hope we see the dollar at 104, at the Dixie, which means that the gold maybe goes below 1960. You know, the next level, I think after that, is probably in the mid 1800s. That would be an absolute gift. But you know my view. I have a full position in silver. I don't have anything in gold apart from my coins, which I don't really count as a position. And I would. I know I want to buy some gold, but I don't see it retreating yet. We need to make a lower low for me to say that, and that's below 1970. So really, we need to break below 1960 for me to start looking at levels where I'm going to buy gold. But for the moment, it's still looking bullish. Silver is a lot has done a lot worse than gold over the past months. But it's still technically, as long as we bounce off that support, it still should be, there you go, it still should be bullish. Even if it does break below, you know, there are levels that I'm going to consider going more than a full position long. I've done it in the past, not very often, but I think this is a time when I might do it again. But you know, you have to be, excuse me, you have to be careful because the dollar bounce could continue, and if it does, then these are likely going to move just a little bit lower. But that for me is going to be, yeah, there you go. I think somewhere between 21 and 22 is going to be the absolute low if we do get a a much stronger dollar from here.
I've got a very shy bid because I mean everybody knows we've been talking about it enough now that we offloaded up there, and then started to reload my first little leg the other day. But I've got one last one there, and then I'll be sort of 2/3 in, and then here decision time, whether buy more and really accompany the bounce, or just wait a little bit and wait for the confirmation to go back down above here and then push the button. So but for the timing, it's a very long-term thing. I know I manage some of it shorter term as well, but we have a different horizon and different style of trading, but our levels are pretty much the same. So this is which makes things a lot clearer actually. If people agree on levels, that's always a nice thing. So yeah, that's it for that one. I don't know, I mean, oil. Okay, if you look at oil, this is your channel, right? I mean, it's still not positive. And look at the inside channel after the gap and stuff is already capped around 74, 73.5, 74.5. So I'm just having a little wider view. I'm not looking at anything tight, but still not that this doesn't look like a buy, right? But as I've been saying already, my big equilibrium zone is here, and that's not too far either. That's between 63, 62. You look at this here, 62.5, a little bit below 62, 67 is my equilibrium zone on oil. And if SPR people involved are saying it correctly, if they don't lie, of course nobody lies, they should be starting to buy some in June. And June could be a month where we're in the summer, where oil actually puts in a low. It could just be, and I'm going to have a close look at it if it comes down to this 62 zone in oil. And I think that's we're going to leave it there. Norwegian krone is still very much on the defensive, and I know Stelios is keeping an eye on perhaps more dollar NOK than euro NOK, but we are back already to 11. Already back to 1170. This 1150, and we had a bit of a stop run below, as I said before, but then it didn't go below this prior spike high either. Bit of a stop run perhaps, but it's starting to have the looks of this 1120 that we saw a while back in March, and we're really bouncing off it very strongly. We're already 2% higher again. And you look at the dollar Norway, it's a bit of a complicated one, this. But anyway, this is your resistance trend line in 1082, and that's exactly what you were talking about, I think, still.
Yes.
We're not far, huh? We are not far. We are trading 1078 right now. So we are really not far. That's only 0.4% in dollar Norway. Yeah, let's see what happens there this afternoon. It looks like this afternoon the dollar may perhaps put in a bit of a top. It's already happening a little bit in if you look at the Aussie and the Kiwi and cable are starting to find support, but we have to keep an eye on what's going on in oil and gas, of course, for the Norwegian krona. But we are in this zone, so I don't know. I'm going to be perhaps tempted just for a quick tryout and then put the stop above this high, perhaps. But if I do, it's going to be small and really a tryout.
Yeah, I'm gonna have a shot at the dollar Norway short in small though, just to keep it interesting.
Yeah.
1082.5. I'm putting the level there.
Okay. Alrighty. I think we have done the rounds. That's good enough for today.
Yeah, awesome.
Leaves me with thanking everybody for your continued support and presence. Thank you very much, Stelios, as usual, and we do it all over again tomorrow.
Thank you. See you tomorrow.